Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today I've got another great one for you. We're going to be having a discussion. I think some of you guys are still kind of in denial about what's going on in the economy. You live in the crypto bubble or the stock bubble, and you don't really have your heads on straight about the reality of these markets. I want to just go over a couple things and kind of have a discussion with you. Right now, we see Bank of America, Goldman Sachs, and now Wells Fargo coming out warning about recessions. Guys, we have to understand something about this market. We're going to have major pullbacks. What you're seeing on the screen right now is the NASDAQ, okay? Like this is not healthy growth. It may, feel like healthy growth when you're in the market and you're starting low and you're riding it up high, but you can see what can happen in these markets and it can be dramatic. Yes, that's the 200 EMA on the weekly. This is how it broke in 2000. Okay, guys? This is how it broke in 2008. Do you see how far below the 200 EMA that price got? We are still above the 200 EMA. We should be lucky if we just get down here into these lower levels. But of course, I'm just going to go over some of the factors that we should be considering, okay? And if you're in the crypto market, you're not in stocks, just understand that crypto can move, 2x, two times the amount that stocks move. And so if we do see stocks taking a huge slide, then crypto is going to perhaps even double that slide. And let's go over why that may be possible, okay? First of all, guys, okay, global profits are way down. If you go ahead and take a look at some of these global profit charts, they are similar to 2008, right? They're similar to 9/11, okay? Like this is 9/11, right? This is 2008. That's not good, okay? They are worse than in the COVID downturn. So right now we've corrected the amount of the COVID correction, on the NASDAQ, for example. But we haven't even come close to what we saw in 2008 or in 9/11. Okay, guys? Like, you have to understand just how punishing this market can be to bad conditions. And although we may be at an inflection point, don't just imagine that this stuff is over. We're having reports now, especially in the UK, but other parts of Europe, that stagflation is already here. Okay, stagflation already exists in Europe, and this is going to be a major issue for the world, and that can spread. Okay, recession may already exist in the United States. We have to get another quarter of data to really understand that, but guys, most likely the recession is already here. Okay, manufacturing business activity fell from 18 to 2.6, and the percent growth is barely remaining positive. We are headed to non-growth, okay? And yet prices continue to inflate. The Fed chairman is now saying his only job is to stop inflation. You know, uh, any hopes that may exist that he's going to save stocks or crypto, it's just a pipe dream. Like, you guys are like literally smoking crack in your mom's basement if you think that he's going to do that. If you think he's going to give a care about your portfolio during this era when he needs to stop inflation to stop stagflation from coming to America. All right. And if it does come to America, that is going to infect the entire world. This is something that we all need to be on the same page about because we need him to succeed in this. Otherwise, we are going to be hurting for years, not just 2022, not just the beginning of 2023, but for years. We have to succeed in this. And I know that there's a lot of economic commentators saying, the Fed's probably going to step in summer. Like, we still believe like they're going to turn around, and then you're going to see this massive rally. Guys, you have to understand the scale of this problem. It's not the U.S. Market just having some type of small hit in a certain sector, which then the Fed can pump up. This is the entire systematic, operations of the world, the entire macroeconomy of the world, and it's all linked together. This is going to be a major undertaking. Okay, the that guy from The Big Short, Mike Burry, right? He says stocks are going to crash and rallies will not last, right? He said that yesterday or 2 days ago. Okay, like this is a quote. This is not from like early in the crash. Okay, this is not in November or December when he's saying it. He's saying it, a day ago, that stocks will crash and rallies will not last. Okay, that's The Big Short, Mike Burry. Okay, we have been in oversold conditions for a week, but there has been no rally. Okay, you guys know what I'm talking about, right? We have been in oversold conditions and there has been no rally. Think about that. Okay, hedges, hedges against shorting is not a sustainable rally. So even if we have a rally, it's just a hedge against the market shorting. It's not a real bull run. It's not a real rally, okay? We are not in a bull market. These are bear market conditions, okay? These are recession and stagflation conditions. Stagflation exists in Europe. Recession exists in the United States. Okay, God knows what is going on in Russia or China. Okay, any rally that you see is merely a hedge against the market shorting. They are shorting. No one is buying the dip to hold except idiots. Okay, nobody is buying this dip to hold except idiots. If you buy the dip, it is exclusively to sell. What do we always say here on this channel? Always be selling, guys. Like in this macro downtrend, always be selling. Any rally is solely meant for selling. If you DCA, the best policy, I mean, unless you're willing to hold, like I said, for at least 1 to 2 years, okay, you better be psychologically prepared for that. Anything that you're buying to hold, you have to be prepared to hold it for 1 to 2 years. Otherwise, you just sell that on any rally you can. Take your profits. Don't get greedy. We are in a downtrend and always be selling. Okay, almost every major fund is hoarding cash right now. You see what's going on with the US dollar. They are not buying the dips of this market, guys. Okay, like, do you see a rally here? They are not buying the dip. Okay, there might be some inflection points that we could get something, but look at this in 2008. Okay, look at this in 2008. Be very cautious, guys. Like, this can happen again. Okay, look at this in, around 9/11. This can happen again. Pardon me. Yeah, this market can go lower than you think. And, again, like they're hoarding cash, okay? Because they want to see the bottom of this market. They are not buying the dips. You buy dips in an uptrend, right? You buy dips in an uptrend because you know you're in an uptrend. When you're in a downtrend, you do not buy dips. You merely hedge against your shorting, which is far more powerful. Okay, major figures, not known to be pump and dumpers, the real market thinkers are starting to more and more say every day, just like I've been saying since November and December, right? I've been saying for much longer than these guys, and I'm just an internet commentator, okay? But I've been calling this right. Whereas these major economists, the real serious ones, not the, Looney Tune Moon Boy guys, they are saying that this market has another 25 to 50% to crash. Absorb that 25 to 50% to crash, okay? And those numbers are starting to lean a little bit more close to about 40%, okay? I've been trying to get a fill of all of these major thinkers who tend to have accuracy, For example, like Grantham, I forget his first name, but the numbers are gelling closer to 40%. Can you imagine the market coming down another 40%? What does that mean for crypto? Okay, if you guys are in crypto, what will that mean for crypto? It's going to be a crash, right? I mean, that's just my opinion, okay? But so far, I've been nailing these calls. Unlike in 2018 and 2020, guys, I've been repeating this over and over again for months. The Fed is not going to rescue us. In 2018 and 2020, when we just tagged this 200 EMA here, the Fed came in with a lot of free money. They just like dumped free money into it. That's where you get that meme of the money printing, right? Like a Fed chairman, Jerome Powell, just printing money, and the money and the dollar bills flying everywhere. That's because of 2018 and 2020. All along this rally on NASDAQ and all these indices, we have seen money printing. That is not going to happen this time. So, why do I keep comparing things to 9/11 and 2008? Because you saw real corrections, you saw real crashes when the Fed was incapable of coming to the rescue, because if they money print, that will contribute to the inflation problem, and their number one goal, in fact, they have stated outright now, their only goal is to stop inflation. They do not give a crap about the markets, okay? They are not going to save your portfolio. That is up to you to save your portfolio. So, guys, I think that we are going to return to those pre-COVID market conditions. Do you understand? Those pre-COVID market levels. There is literally no hope, okay, until maybe midsummer, end of summer, when perhaps we can reevaluate how the Russia, invasion of Ukraine, how these idiotic, Chinese Communist Party supply chain closures, where they're locking people in their houses. I mean, really totalitarian stuff, just shutting off manufacturing, shutting off the supply chains, causing massive global inflation. Let's see if those Chinese communist policies change, and if the Fed's aggressive interest rate pushing, we have to reevaluate all of these things to see how it's going, and so that will be our first inflection point towards the end of summer. Don't get greedy right now. Don't get, pie, in the sky type, moon boy visions of the future. You have to be highly realistic. If those things persist, then consider to just write off the entire 2022 and don't even think about long profit until mid 2023 or perhaps even later, okay, guys, if those things persist. If they level off, say, for example, if the Russia Ukraine situation gets negotiated to a settlement, boom, that's going to be amazing. That's going to open up the breadbasket, again. So food inflation is going to, start to drop off. Those minerals inflation is going to start dropping off. We're going to see, the relief for the European markets, right? And that's really important in a stagflation condition that can spread globally. And of course, if China reverses its virus prevention, manufacturing and distribution closures, then we're going to see supply chains just open up, and a lot of relief is going to come to the market, and those prices, because the US gets everything from China these days, right? Thanks, George W. Bush, right? Thanks for making China, our number one trade partner. That was great of you, right? And if the Fed front loads rate increases, to say like 75 or 100 basis points in June and July, like really fast, if they just try to catch up, right, and get to that 75 basis points level, instead of sitting on their hands at like 25 basis points or 50 basis points, so that they can later on lower the increases to 25 basis points. You see what I'm saying? Move it up to 75 basis points now so that by the end of summer, you can start lowering it to 25 basis points increases. In other words, you're still increasing the rates, but it is a smaller rate increase. And so markets can say, hey, like we thought it was going to be higher. This is actually a great thing, and the markets will react positively. Uh, but that also has to come along with peak inflation being an indication. In other words, we have to see that the cost of goods is not rising still, because of course the Fed will have to continue to be aggressive if we haven't seen peak inflation yet. If all of these things come together, then we might just be able to save the fall season for stocks and for crypto, or perhaps have some type of bounce in winter. Of course, winter is never an ideal circumstance because it is end of year profit taking. But hey, guys, like even in this best case situation, we have to watch out for curveballs, right? For example, the housing markets. China had been lowering interest rates, in general, in a kind of contra policy to the US, which really hurts the efforts to fight inflation. But I guess China has internal pressures that they needed to do that. And yet, even China has suddenly tightened the housing rates, which means that China is perceiving that their real estate market is in trouble and something needs to happen. There are a lot of whispers that there is an additional financial crisis brewing on the horizon related to real estate. So just keep that in mind. Just watch out. A lot of these other industries are starting to be contaminated by all of these problems. And don't forget that oil is probably going to skyrocket again if China does reopen. So, all of this is connected. And, of course, if you just live in your little crypto bubble or your, meme stocks, little bubble, on Reddit or whatever, then you're missing this big picture. Guys, all of this stuff is connected. Best case scenario we're talking about is wiping out the entire gains of post-COVID. Okay? Worst case is we are going to be set back to even before pre-COVID because the market conditions are going to be bad, whereas they were really good pre-COVID, okay? Don't let any moon boy or, crazy YouTuber or some stupid like crypto Twitter account, try to confuse you about this stuff. Whether or not there is a short, hedge rally, we can't even call it like a bull run or a bull rally. It's going to be a short hedge rally, here or there. It doesn't really matter, okay? Like we can see little pumps, but understand what can happen because we've seen this post 9/11, we've seen it in 2008. And while we may be set, and poised to perhaps have little pumps, you have to understand these things are going to be short-lived and not sustainable if we're really facing these conditions from like 2001 and 2018, because the situation is totally different than 2018 or 2020. You guys, we're looking at this like most people are just looking at this. They need to start be looking at this and understanding what are the risks here and making correct decisions for themselves. Okay. We are seeing Walmart take massive hits, for Christ's sake. I mean, Walmart. All right, we're not talking about Moon Boy, Tesla, technological speculation and just brands that we love but we can live without, right? We're talking about like Walmart, okay? We're talking about food now, right? We're talking about very uh, specific things that are going to set the stage for a lot of problems. And that just shows you how much of a pinch this market is in. And of course, yesterday I was saying I didn't think that we were going to be able to get the rally that everyone was talking about, that rally to, 35, thousand. which of course, we can predict, we can attempt to say like that would be a logical spot to pump to, but we just weren't ready because if you looked at the MACD on the markets, and I told you guys watch that MACD, we were actually facing some serious resistance here. And I'm telling you, it's because of those. Uh, it's because what we're actually looking into is a short hedge rally. We're not looking into a bull run or anything like that. So that's why I asked, where are the buyers? Where are the buyers? Would you be buying in these conditions? Okay, so we actually got rejected here. Are we going to get rejected again? Most likely not. I think that we've now had time to kind of evaluate these prices. We are, again, considerably oversold. And so we are seeing the possibility that this next pump could perhaps be the one that lifts us up a bit, right? Something like this, perhaps we get a little bounce before the next fall. And so, guys, keep your eyes on this MACD. I wasn't kidding last episode, okay? And asking where are the sellers. Guys, I was right. There was no bounce yesterday. Everyone was expecting a bounce yesterday. There was no bounce. Would you buy that? Like, would you buy that to hold? Who's buying that to hold? The only reason that you would have been, buying back there is to hedge against your shorting. It's not because you wanted to hold anything or buy at those levels. These guys, these big institutions, they're not stupid. You think they're really filling their bags with like crypto and Bitcoin right now when we're facing everything that I've just outlined for you? Guys, these guys are not stupid. Look at the MACD on these other ones. We're not ready to cross up yet. We're not ready to cross up yet, okay? I'm just going to go through a couple of these indices. Look, we're having the same curve, right? We're pinching up. We're getting a little bit closer. The market may be making the decision that it's going to have, a short rally. But, you know, uh, we're there on the Russell, which of course took the hardest hits earliest, right? The Russell got decimated early on. It was the first one to take all the hits, so it found its bottom, perhaps its temporary bottom. But for these other indices, look, the S&P, it's not. We're not there yet. Where's the crossover? There is no crossover. The S&P doesn't want to go. How's the Dow Jones? Dow Jones is way off. The Dow Jones isn't even close to being ready. Okay, so this weekend, perhaps the market is still going to be negotiating with itself. If you look at the formations on some of these charts, I don't know. Let me go to 4 hour. Let's do the 1 hour. This could just as easily, be a bear flag as it could be a potential W bottom, right? Like this type of stuff. That's what we're looking for. If you're bullish, that's what you want to see happening. But at the same time, you have to understand that the market understands that this could also be just a bear flag. And so if you're a buyer, why would you want to buy a bear flag? You want to confirm support. So this market needs to test it out a little bit. Um, Guys, a couple of you, whenever I have this, not the best news, a couple of you guys, give thumbs down just because you guys, I think, are moon boys or something. Like, there's a couple moon boys in the audience that just feel like they need to hear positive news. But, guys, you can make money shorting. Okay, you can make money accumulating at low levels. Those are the best opportunities in your life to potentially become millionaires in these markets. So don't feel bad about that stuff. Don't feel bad about negative news. It's necessary for markets to have corrections. If we don't have this correction, there is going to be a huge amount of sickness in the market, which will eventually have, a depression level event collapse later on. We have to have these corrections. It's healthy, okay? And we didn't get the proper corrections in the last few years. So now we're paying the piper. And if you want to see something on this show, if you want to have some type of discussion, if you think that it's going in the wrong direction, leave a comment, okay? And your feedback will help me to improve. But I don't know what to do about like thumbs downs, guys. I'm just going to be making the show that I want to make, unless I have feedback in which we can have a conversation. It can be a two-way conversation. That's, I highly welcome that. But we've got these kind of bear flags, right? We've got these bear flags on every single setup right now, okay? And while we do know that we could get a pump off of this, right? And perhaps make those W bottoms, which are going to be a nice, reaction rally to this downslide, we also have to be aware that it could just be a bear flag that breaks down. And so, who is going to be buying right here? I don't know. Maybe some type of good news has to come out. Maybe it could just take the weekend. So maybe next week is going to be a green week. We've had about like eight, bad weeks in a row, and it's highly unlikely. You know, it's highly unlikely that people are just going to put billions, and trillions of dollars into the market without some kind of good news. And I've outlined, go ahead and review, the first 15 minutes of this conversation. Again, play it at 2x speed to save your time, but go ahead and review it again to understand exactly what's going on. And you can understand it's very hard for the market to do something like this right now. They may just want to bring it down a little bit more, find that support, make sure everything is at support before we go. And so if you look at Bitcoin's chart, you can see something very similar, right? You can see that we have that kind of bear flag formation going on where it could just as easily, it could just as easily be a little bull flag, temporary one, as it could be a major bear flag, right? And so that's what I'm saying. Where are the buyers? Buyers, come on. Come on, buyers, right? Come in. If we're going to fill in the CME gap at 35,000, let's go over to the CME chart. You can see there's the CME gap right here. Then this pump needs to come on Friday, right? I mean, it needs to come today, right? We need to fill that gap on Friday because CME is going to be closed on the weekend, right? That's what they do. That's why there's a gap, because they're closed on the weekends and nights. It's a professional exchange gap. So if we're going to retest that gap, right, and then perhaps come back lower, then it has to happen either on Friday or Monday. And so a weekend pump isn't going to be, realistic on this. And we don't have to fill that gap. It's enticing, but remember, we had a gap here that didn't get filled until January 2022, right? We had a, July 2021. It didn't get filled until, like 6 months later, approximately, something like that. So does this gap need to be filled right now? No, it doesn't. You can totally ignore this one because maybe that gap gets filled, 6 months later, right? Over here, okay, after a major journey or whatever. All right, guys, not going to go longer with this one. That was your alpha for the day. The indicators do want us to go up. I have to say, like, everything looks like it's poised to, want to continue to go up. But, uh, it's very weak. It's not very convincing. And buyers really, haven't been convinced yet. So we are getting some small indications that, on some of these, MACDs, for example, the Russell and, Bitcoin, we are getting those positive crosses. But again, it's not very convincing. You see this yellow EMA here, it hasn't turned up yet, right? We're really waiting for that one to get like a nice positive slope on it. because otherwise you can just get these kind of like twisty situations where it just comes back down, and that's going to be a massive fake out, just faking people out, because the smart money, they're not going to be buying right now, guys. Like, replay what I said. Smart money doesn't get in on those conditions. The only thing they're going to do is to hedge against their shorting using you as their liquidity, or faking you out in order to take your money before continuing down. Okay, so wish I had better news. That was your alpha for the day. Stay safe and happy trading.